Hello everyone, what's up? I hope you're doing well. My name is Daksh and welcome to Forex Monopoly. In this video, I'm going to tell you about an highly profitable Forex trading scalping strategy. And as this is a scalping strategy, it will be used on 1 minute and 5 minute time frame. Now, let us not waste any time in the intro and let's get right into the charts. As this strategy is going to use a lot of indicators, let us first set up your charts. And for that, go to TradingView platform and in there, click on indicators. Now, you have to search for Bollinger Bands and you have to add 3 Bollinger Bands to your chart. So click on it 3 times and 3 Bollinger Bands will be added. Apart from this, you will also need RSI. So click on RSI and click on it. Now, after that, you have to change the settings of the Bollinger Bands, like the standard deviation of one will be 2 and the others will be 2.5 and 3. So now you will be able to see 3 separate Bollinger Bands. The next thing you have to do is change the color of it. So go to style and then from here you can change the color of it. Like let us keep this to black. So we have one blue and one black Bollinger Band, and let us keep this third one. Let us change this color to yellow or any color you would like. Okay, just a minute. Let's keep this to yellow. This is how your chart would look after that. Now the next indicator that you are going to need is RSI, and for that the settings is the length will be 14 and the rest of the settings will be just as you are seeing in the chart. Now, these are the indicators that you will need and this is how your chart should look after you set it up. Now, let us learn about the strategy first and then I will tell you about some important key rules that you need to follow. And before that, I want to tell you that the time frames that we are using with this strategy is 1 minute time frame, 3 minute time frame and 15 and 5 minute time frames. That is 1 minute, 3 minute and 5 minute time frames, and the pairs which this strategy can be used on is all the major currency pairs. So let us first understand what this strategy is all about. I believe that there should be an idea or any other methodology behind any other strategy. So my methodology or an idea about this strategy is that in a Forex market, the prices move due to 2 different things. The first one is an important level and then a momentum change, right? The price won't move just because there is a momentum change. There also needs to be an important area. And that is what we are going to do in this strategy. We are using the Bollinger Band to find important areas like this area over here, the upper bands and the lower bands of the Bollinger Band will serve us as resistance and support. And then what we are going to do is we are going to add divergence with it. So that we have momentum change with an important level. So this is how we are going to use the strategy. Now let us see what the strategy is all about. So the first thing that you are going to do is you are going to use 1 minute time frame or 3 minute or 5 minute time frame. Like in this example over here, before I tell you the rules, I'm going to tell you the strategy, right? So let us take an example of what your trading setup would look like. So we are on Euro USD and this is 1 minute time frame. So if you could see over here, right, the price is moving down from here. Okay, the price was moving down and down and down. And then after this, you will see how the price dropped down to this Bollinger Band and it moved up. Then it again moved down. That is, it created a lower low. So the price is creating a lower low and the price is at an important level, which is a support, right? The lower bands of the Bollinger Band will serve as support and the upper will serve as resistance. So here we have support and if we compare this with the RSI is opposing it and creating a divergence, right? So as you can see after that how the price moved up. Now for those who don't know what a divergence is, I already have a video on it and you can check it out by clicking this button over here, and I will also brief you about what divergence is right now. So what divergence is like, let us say that the price is moving down and creating lower lows, right? Lower low, and lower low. So RSI is supposed to copy the price. That is, if the price created this, RSI would do the same and move like this. But in some cases, RSI will oppose the price. Like here, the price was creating lower low, right? But the RSI opposed it and created a higher low instead. Therefore, telling us that there is a momentum change. So what we have over here is we have a very important level and we have a momentum change at that very important level. And therefore, we have our buy opportunity through this trading setup. Okay, now while finding the divergence, there is one very important rule that you need to follow. And that rule is the divergence should always form on the overbought or oversold level. Like in this case, this is the oversold level and this is the overbought level. So here the divergence is formed at an oversold level, that is at the level of momentum change. Okay, so only this kind of divergence we are going to use throughout this strategy. Now let us take one more example so that this strategy gets very, very clear to you. Now we are still on Euro USD and 1 minute time frame. So if we shuffle through it, here you can see how the price was moving down, right? And then the price created a lower low. But if we connect the starting point to this, you can see how the RSI created a higher low instead. So we have two important things: a lower low at the Bollinger Band and divergence created by RSI below this level or on this level. And so after that, the price moved up. So this is the simplest strategy with very high win rate. Now, this strategy is not going to always work. And there are some rules that you need to follow, because understanding a strategy is one different thing. But I have backtested this strategy on several other charts and more than 100 trades. And that helped me make certain rules that I will lay down right now and that you need to follow throughout the strategy. Before we move to the next part where I tell you about the rules that you need to follow, let me talk about today's sponsor, XM.com. XM.com is one of the top trusted global broker, and it provides you with more than 1000 plus trading instruments and more than 800x leverage. You can trade Forex, CFDs and cryptos on this platform, and not only that, XM.com also provides you with a personal account manager, access to Forex market research, webinars and many other video tutorials. And to open an account with this broker, go to the link in the description down below, which is my affiliate link, and get a sign up bonus. Now, let us get back to the strategy. The first rule that you need to follow is of setting up a take profit. Now, how to set a take profit with this strategy? Like, let us say that you saw this opportunity and got right into it, right? This is a lower low, but the price has created a high low instead. And so we would enter somewhere near here. So let us say that you took a long position from this point after this candle is over. And then let us say how to set the take profit. The take profit will always be near the upper Bollinger Band, like near the blue line. Now let us calculate how much that is. So if you enter over here and your take profit is till the blue line, then you can see how it is around 12 pips. So your stop loss then would be of around 6 pips, which is half of the take profit. And the reason why we are doing this is so that we can at least get a risk to reward ratio of 1:2. That is, if we risk around $10, we will always get $20. And if we risk around $20, then we can get around $40. So that even if your win rate is around 50 to 60%, even then you will be in a huge profit. So this is how you set take profit and stop loss, and this was the rule number 1. The next rule is very, very important, and that rule is when to not enter a trade. Like I said many times, the strategy will fail, and with this rule you will know when this strategy is going to fail, and you have to avoid such kind of setups. Like, it is not that trading is not about entering every setup you find. You have to always find quality setups, right? So there will be some times when this strategy won't work, and for that what you need to do is you need to find the squeeze. So let us understand what is a squeeze. So if you see, the Bollinger Band are mostly wide apart from each other, but then there comes a point when the Bollinger Band appears like someone is squeezing them from both sides. Like over here, first the Bollinger Bands were apart from each other, then at this point you can see how it appeared like it is being squeezed from both the side. So after a squeeze, there always has to be a squeeze breakout. That is, after this, when the Bollinger Band moves apart, the price will always move in any one direction, and it is called as squeeze breakout. So during this, whenever there is a squeeze breakout, the price will mostly move around this Bollinger Bands only. So during this time, if you see a trading setup, you have to avoid that trading setup. Until what point you have to avoid is, you have to wait for the price to move above this sentiment line and near about this upper Bollinger Band, right? And only then you will enter into a trade, right? After this squeeze, the price moved up and it moved above this sentiment line, this orange line over here. It moved above it and then it moved down and then it gave us a divergence, and only then we entered a trade, right? So even here you can see how the price moved up. So if we compare it with the RSI, even here there was kind of a divergence at first at this level, but we avoided it because there was a squeeze. There was a squeeze going on. After this squeeze and squeeze breakout, I waited till it moved down to the lower Bollinger Band, and then when it moved above, I used that opportunity as a trade. Like if I zoom in over here, you can see how the price, like let us say this was a squeeze, okay? So I waited and waited and waited over here. Then the price moved down. I still was waiting. Again over here, it is still creating a divergence. If you see, it is a higher high, but this is a lower high. I still waited, and then it dropped down, and then I got a confirmation that yes, if now the price creates a higher high and if this gives me an opportunity, I can get into a trade. So after that I waited, and then the price created a higher high. We got and touch on this level, and there was a lower high opposing, and then I entered here and the price moved down. So you have to always make sure that after a squeeze breakout, you have to wait for the price to at least go to this Bollinger Band or near or below this level, clearly below this level, okay? So this is how you avoid getting trapped into a squeeze breakout. And these are the certain rules that you need to follow during this strategy. Now let us take another example to understand more clearly. This example is a very good example of how to avoid squeeze breakout and then wait for an opportunity. And this happens most of the time, that after a squeeze breakout, when the price moves down, then we get an opportunity, right? So let us say this was a squeeze, price moved above, squeeze breakout, we are avoiding every divergence over here. Then we are waiting for the price to move below it. It moved below it, and then we are waiting for the price to create a divergence, but also this RSI line should be on the oversold level. So we won't enter here, we won't enter here, we won't enter here. We will enter when we have a touch over here. So if we see, this is a higher high, but then there is a lower high here. So let us say we got an opportunity at this point, okay? So a short trade from here. Now our take profit will be at this point. So calculate how much the take profit is from here to here. The take profit was around 12 pips. So stop loss will be of 6 pips. So I entered here, and my take profit will be till this blue point. But as I can see that the price was correcting over here, you can also get out with this much of profit, which is always preferable. As soon as the price gets somewhere near here, don't be greedy for this additional profit. Just get out of it. Okay, so this is how you use this strategy, and this is a highly profitable strategy. I've back tested it on 100 plus trades, and I've got a risk to reward ratio of 1:2 on most of the trades, and most of the times it has also gone to 1 to 1.5, but the win rate of this strategy is more than 80%, and I have myself tested it, and you can also do that. So happy trading, and thank you so much for watching this video.